Hey everyone, Couch Investor back to another video for today. So first episode of this earnings day is Roku, then we'll go into Teladoc. Now Roku at the time of making this video, stock is down around 1.2% or so, but it was up close to 4-5% before. I went through the report. Even though they beat on earnings per share estimates and revenue, I did not really understand why the stock was up that much after hours. Maybe the algos got it wrong. So let's talk about what happened this quarter. Overall, the environment right now for Roku specifically is still not great. They don't expect it to become much better in Q2 either. Gross profit is also down. Profitability of the business is not really improving that much, even though they say that, well, as you can see here, at the same time, we are managing investments and costs and executing on our plan to deliver positive adjusted EBITDA for full year 2024. Still a long way to go. So we're going to have a look at all the report right now. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So total net revenue was $741 million. That's up just 1% year over year. Platform revenue was $635 million. That's down 1% year over year. Gross profit is down 7%. Reach $338 million. Active accounts were 71.6 million, a net increase of 1.6 million active accounts from Q4 2022. So that's good. Streaming hours were 25.1 billion. That's up 4.2 billion hours year over year. Again, great to see. Now ARPU took a hit. That's down 5% year over year, also down quarter over quarter, reaching $40.67. And then, of course, as always, the Roku operating system was the number one selling smart TV OS in the United States with 43% TV unit share. Now here you can see the trend. ARPU has been declining right now since Q3 2022, but active accounts keeps on increasing, streaming hours keeps on increasing as well. So if you want to be a bit optimistic, let's say, when the advertising market recovers, then of course you can advertise and monetize all of these users that you kept on getting throughout a difficult period. Of course, that's one way to look at it. Then, as for platform revenue, we already saw this. Devices revenue is actually up 18% year over year to $106.4 million. Okay, then you look at gross profit for the same. Devices gross profit, which was before player, by the way, is now positive 3.6 million. Platform gross profit is down quarter over quarter as well, reached $334 million. But if you look at platform gross margin, 52.6% this quarter, down 6.1 percentage points year over year, also down around 4 percentage points quarter over quarter. Devices gross margin have improved, so 3.4% here, or up 17.9 percentage points year over year. But overall, gross margins are down year over year 4.2 percentage points, reaching 45.6%. Yes, it is a big increase, let's say, from Q4. But still, there's a long way to go, especially if you look at total operating expense. In this quarter, yes, it is lower than Q4, but then again, it's still 42% higher year over year. We'll see a bit further on in this video the direction of this going, and also stock-based compensation not really going in the correct direction. Then income loss from operation, of course, it's a loss, $212.5 million, increase of 804%, not a positive increase, by the way. Adjusted EBITDA also increased 220%, negative $69.1 million. Adjusted EBITDA margin, negative 9.3%. That's down 17.2 percentage points year over year. Now, as for the outlook, and it's not getting much better. They'll give us some more information later on. Total net revenue of $770 million. Total gross profit, $335 million. Net income loss, $175 million. And then adjusted EBITDA of, again, negative, a loss of $75 million. So overall, not that great. Continuing here, same information over and over again. So let's go straight to driving engagement. This is a trend that you can see across the board. So they say here cord cutting continues in the United States where more than half of the households have eliminated traditional pay TV, eMarketer said in March 2023. In Q1, viewing hours on traditional TV in the United States were down 10% year over year, according to Nielsen, while global streaming hours on the Roku platform grew 20% year over year. Again, when the market recovers, I think Roku will be in a great space. Then they give us some example here of, let's say, the power of the platform. So for this year's Super Bowl, Roku was the most popular streaming platform with approximately half of all streams. Of those users, 12% started the game through either our sports experience or a game-related ad. Now, as for the Roku channel, it's the free channel, but they monetize it through advertising. So the Roku channel's incredible growth across the platform in the United States, Canada, Mexico, and the UK, with Q1 streaming hours up 65% year over year, the Roku channel remains a top 5 channel on the platform by both active account reach and streaming hour engagement, continuing its strong position among the most popular services in streaming. They also say here that the Roku channel is a top 5 channel in Mexico by active account reach, so internationally they're still growing this channel pretty successfully, as we can see right here. Again, remember the flywheel, right? You attract more viewers. Those viewers, since this is ad-supported channel, advertising comes in, which means that they can invest in more content will attract more viewers, and so on and so forth. Then they talk here about monetization, so ARPU being down, etc., etc. So the macro environment remained challenging in Q1, with the total US advertising market down 7.4% year over year. Ad spend decline was even more pronounced on traditional TV at 12.7% year over year, and traditional TV ad scatter was down 20% year over year. While ad spend on the Roku platform in verticals including financial services and M&E, so media and entertainment, remained pressured. Verticals such as travel and health and wellness improved. And now we're almost at the end here, so we have an update actually when it comes to executives. So we're excited to welcome Dan Jeddah to Roku as Chief Financial Officer on May 1st. He's extremely familiar with the power of technology to transform legacy business model. Dan previously served as CFO at Stitch Fix since 2020. Before that, he worked at Amazon for 15 years, predominantly as Vice President and CFO for digital video, including Amazon Studios, digital music, and the advertising and corporate development organizations, which, to be honest, is a pretty good get, especially for a company like Roku. Lots of synergies there. Dan will report to Anthony Wood and will work closely with Steve Loudon, who will provide advisory services to the company as an executive advisor until August 2023 to ensure a smooth transition. And then as for Outlook, like I said at the start, this is the extra information, well, for the context of the bigger picture here, let's call it. We expect macro uncertainties to persist throughout 2023. Consumers remain pressured by inflation and recessionary fears, and thus discretionary spend is likely to remain muted. Accordingly, we expect the advertising market in Q2 to look much the same as it did in Q1, with ad spend from certain verticals improving, travel and health wellness, while others remain pressured, media and entertainment and financial services. Okay, let's see what happens. Of course, it's not just for Roku, it's the overall economy still has a lot of question marks. Now, remember I said before total operating expenses, so let's have a look at actually stock-based compensation. So again, a huge increase, or not a huge, but a big increase year over year. Last year, 69.5 million. This year, close to 100 million. This is really not the direction you want to see it going, especially if you look at the overall business declining, especially when it comes to profitability as well. Of course, going forward, this will decline with layoffs, with cost cuts, etc. But right now, really not, I think, the picture that most investors want to see. And so to conclude, while overall in this video you might sense a negative tone, which again, I think it wasn't such a great quarter, all things considered. And I don't think next quarter will be great as well. I'll give the comparison, let's say, with another company that we cover on this channel that I own, Intel, right? Last quarter, again, I gave a negative tone and I said I don't think it's going to get much better in Q1, and the company itself doesn't think it's going to get much better as well, which we'll cover, by the way, tomorrow after the market closes. Again, for Roku, it is a good company, but right now it is operating in a market that is struggling. Until that market turns, I think Roku will continue to struggle. But in the meantime, if we're looking at specific metrics that we want to see improve or continue to go up, I think we're getting those numbers, right? You're getting more people on the platform, more streaming hours as well. So again, when the market turns, that will turn into a significant tailwind for the company. So that will be it for me for this video. Obviously, do leave your thoughts down in the comments below. I'm going to go and look at Teladoc. If you want to watch those videos, stay tuned. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.